This is Tom Fox. I would like to welcome you to a special 5-part podcast series, Integrity Matters, Assessing the Corporate Compliance Climate in 2021, brought to you and sponsored by K2 Integrity. In this 5-part exploration, I'm joined by Snejana Gabauer, who is an Executive Managing Director and Head of Investigations and Risk Advisory Practice for the Americas. She advises leaders in business, finance, and government on risk management, investigations, and compliance, and is recognized for her significant experience in anti-corruption and investigative matters in Latin America, Eastern Europe, the Middle East, and Asia, across every business sector. And Bob Brenner, who is the Global Co-Managing Partner and Chief Legal Officer at K2 Integrity. He has more than 25 years' experience in advising government and private sector clients as a monitor, investigator, and as consultant. Bob has been appointed and currently serves as a monitor or independent consultant on behalf of federal, state, and local government agencies, as well as international regulatory bodies. Bob and his team have also designed and implemented changes to clients' procedures, risk assessment procedures and processes, training protocols, and technology to close loopholes and provide both robust monitoring of future transactions and conduct. Over this 5-part series, we will assess the landscape resulting from the pandemic regarding compliance. We will consider what companies can expect from the new administration and its priorities. We will consider anti-bribery and anti-corruption compliance and enforcement in 2021. We will look at global trends impacting risk and compliance in 2021. And we will conclude with preparing your company for what is next. In part 1, I visit with Snejana Gabauer on assessing the landscape resulting from the 2020 and ongoing pandemic. Hello, everyone. This is Tom Fox. Welcome to a special 5-part podcast series, Assessing the Corporate Climate in 2021, a special podcast sponsored by K2 Integrity. In this episode 1, I'm joined by Snejana Gabauer, and we're going to talk about assessing the landscape resulting from the pandemic. So first of all, Snejana, thank you so much for taking the time to visit with me today.
Thanks for having me, Tom.
So one of the largest things to impact compliance in 2021, and indeed literally across the globe, was the pandemic, the economic stimulus around the pandemic, and relief funding. I wanted to start with asking you, what do you foresee for entities who accepted or even processed these funds?
Sure. The rapid speed at which the massive federal and state stimulus packages were released last year created obviously ample opportunities for fraud. The main relief programs that were administered by the Small Business Administration, namely the PPP and the Paycheck Protection Program and EIDL, the Economic Injury Disaster Loans Program, received a lot less scrutiny than typical SBA loans would during normal non-emergency times. And only through the PP program alone, massive funds of over $500 billion were distributed in a very short time frame. And as expected, both programs were tainted by numerous examples of fraud. Early on in the summer, we learned from various reports that over at least $1 billion of relief funds from either program had likely been misappropriated. And so the government has embarked on a pursuit of this misconduct related to the distribution of relief funds, and is likely to continue to do so even more aggressively. So far, they've been focused on 3 key categories. One being those who received relief funds for legitimate purposes, but instead used the loans to purchase splashy luxury items for themselves. The second group would be coordinated criminal groups who stole large sums of money from the programs. And the third group are the gatekeepers for the stimulus funds, the banks who were asked to facilitate the distribution. Banks have been scrutinized and will continue to be scrutinized, and they have, at least the larger financial institutions, have done a relatively good job of self-regulating. I think we heard reports late last year that both Wells Fargo and J.P. Morgan had identified fraud related to both of these programs, the IDL and the PPP, and had made terminations of their own employees who they identified had abused the programs. So all in all, there's been a substantial prosecution of fraud related to the pandemic relief funds, and this will continue. We expect to see a significant uptick. Specifically, I think there were reports that the FBI had already opened several hundred investigations, and so with the change of the administration, we accept that this would only intensify. And it would stay there for a while. If the Special Inspector General for Pandemic Recovery that was established in response to the allegation of pandemic relief funds fraud is modeled anything by as the similar TARP program that we have, it would last for a while, and for many years to come. So all that to answer your question, what should businesses do that have received relief funding to avoid being subject of a CARES Act investigation? One, I would say commission an internal audit to document how loan proceeds or other benefits were used. And then companies should really take special care to comply closely with the accompanying regulations for each of those loans. And then two, if it does appear that CARES Act funds were used in an authorized manner, then it is critical to self-report this unauthorized use of program benefits and further to establish compliance and to repay any benefits before the company is potentially notified of an investigation by the authorities.
Snezan, I'm very interested in your last remarks because you've listed 3 of the 4 requirements of under the Department of Justice's corporate enforcement policy, and the remediation would be the 4th step. But you seem to indicate that a company could at least apply under that corporate enforcement policy if they engaged in the steps you've taken. Would that be a fair assessment?
Yes, that would be a fair assessment.
The gatekeepers, you mentioned those. We're now recording this in early January or mid-January 2021, and we've had now significant experience with the funding mechanisms, and we're now sort of in rounds. I don't know if this is 2 or 3 or something, but have the gatekeepers, in your opinion, had an opportunity to set up the right policies and procedures to not only vet the potential candidates, but protect themselves as well?
I would say at varying degrees, Tom. I think some of the leading institutions, financial institutions, have expected from the outset that they might have similar outcomes, and they have, in our experience, they have consistently worked on improving the frameworks, and those that didn't have all taken steps to varying degrees to be as much as possible in compliance and as much as possible to self-police, self-regulate, self-detect.
You mentioned in your opening remarks a couple of examples of fraud in the receipt of the funds, perhaps an individual or a small business who might spend the money on luxury items, criminal enterprises or groups of criminals defrauding the government. I was wondering if there are any examples you could give us.
Yeah, sure. I think one of the one of the largest, I think, frauds that was prosecuted was it's actually in the state of Ohio, where I think that a group has attempted to apply for loans of over $36 million with making false representations, and they were able to obtain not all of it, but a large portion of that money. Clearly, there's criminal prosecution at the moment. I think there are other examples where small business loans were obtained, instead of being used for payroll. Obviously, they were used for luxurious vacations. In some instances, expensive cars were acquired, and so forth. So I think there's obviously a wide range of examples of how the funds were abused, but the prosecution comes down to two main areas. One is uh, fraud related to making representations to obtain the loans, and then the second one is the actual use of the received funds.
You mentioned the continued activity as we record this before the inauguration. So perhaps under the Biden administration, we'll continue, and certainly there will be investigations and prosecutions for this latest round of funding. But do you see enforcement activity being guided by the aftermath of COVID into the rest of 2021 and even beyond?
Um, Absolutely. The COVID recession, I think, is a perfect storm of of misfortune. And as any economic downturn, it has created a lot of incentives for fraud. So, in addition to the fraud that I talked about earlier, related specifically to the use of and abuse of relief funds, the pandemic has brought about an economic recession, and the recession, like any other recession, has instigated a lot of other opportunities for fraud. That specifically, it's impacted a number of industries, created a very volatile environment, and as a result of that, there's valuation fraud, there is financial statement and accounting fraud that we've seen. Insider trading has been on the rise, as well as cyber fraud. And so when we talk about enforcement, and increased enforcement, we're not only going to see, I think, with the change of the administration and the current outlook, a shift towards a focus on prosecuting fraud relating to the pandemic, but also these other types of fraud, not only from DOJ, SEC, but from other law enforcement agency as well. So as we saw after the crisis of 2001 and the 2008 crisis, there was an uptick in the prosecution of corruption cases or financial fraud cases. We're going to see similar spikes in 2021 and beyond.
You mentioned prosecutions or at least investigations in different areas of fraud. For public companies, that would involve probably the Securities and Exchange Commissions. At the highest level, what do you see some of the key trends to watch for regarding the SEC?
Yeah, so with respect to for respect to the SEC, I think we're going to see increased scrutiny on the dissemination of material non-public information and insider trading violations. I think also we have seen that the SEC has emphasized a focus on the accuracy of ESG disclosures and compliance policies. And I think this is going to become a fairly prominent subject of enforcement investigation under the new administration. I think we're very likely to see increased number of investigations under the FCPA, while there's been a substantial, I guess, FCPA activity and settlements over the past 4 years. The number of FCPA cases has dropped down, and the hope is that under the Biden administration, the SEC will replenish the number of active investigations. And I think finally, with the SEC, I would say one of their key programs has been the whistleblower program. And after a decade after it was established, it's continued to flourish. Last year alone, the SEC had a very successful year. It awarded over 175 million to I think it was 39 individuals, and it issued the highest award to a single whistleblower, which was $114 million. That's the largest award to date. So we expect that the SEC is going to continue to leverage this program as a source for new investigations and also to strengthen its enforcement efforts. So, and hopefully that will encourage other agencies to adopt similar whistleblowing programs.
Zana, unfortunately, we're near the end of our time, but I was wondering if our listeners wanted any more information on any of the topics you've raised in this podcast. Where could they go?
Please visit our website, which is k2integrity.com, or follow us on Twitter and LinkedIn.
I hope our listeners will join us tomorrow for our next episode, where we take up what companies can expect from the new administration and its priorities. Snezana, I look forward to continuing the conversation.
Thank you for having me, Tom.
This is Tom Fox again. I hope you've enjoyed this episode in our 5-part podcast series on Integrity Matters, assessing the corporate compliance climate in 2021, sponsored by K2 Integrity. For more information, you can check out the K2 Integrity website at www.k2integrity.com. I hope you'll join us again for another episode as we continue to explore many of the issues that corporate compliance professionals, practitioners, and corporate compliance functions face in 2021 and beyond. This podcast series has been a special production of the Compliance Podcast Network.